Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So today's video is going to talk about something that we jumped into quickly yesterday in the coaching sessions. So first off, kind of want to thank all of you who stopped in last night. Really feel that these coaching sessions are going to be like a great just like a great forum for us to, really like talk options, talk strategy, just, every couple weeks, just like a good opportunity for a bunch of us option people to get together and really like talk shop. So, um, personally, really looking forward to that. Uh, but last night it came up because obviously today is election day, and it it's been a pretty volatile stretch up until this point, right? So uh, not all of the volatility has arisen because of the election, but it is contributing partially to the volatility. So I mean, like there's treasuries, and then there's tariffs, and then the election is kind of maybe, I don't know if the icing on the cake, but it's certainly contributing to the overall risk, maybe averse atmosphere. And all the talking heads have kind of set the expectations for who they think is going to win the House, who's going to win the Senate, so on and so forth. I'm not going to get into that. Obviously, with the presidential election a couple years ago, we saw that a lot of these early polling could be pretty far off of what the actual reality is. So we could be really setting up for a volatile night. So futures, basically once like the results start to trickle in, you're probably not going to get much in the afternoon, but maybe like closer to this evening, or even like once you get into like 8 or 9 o'clock and they start calling the districts, you probably start to see the futures swing around, which I feel like sets us up for a pretty volatile day tomorrow. And kind of what I was speaking about yesterday was just how like near term, it's more of a bearish, or my opinion is that we're still in a kind of like in a bearish holding pattern for the SPY, for the Qs, for some of these moving averages. And really the reason behind that is the 200-day. So the 200-day was a really significant area of support February, March, and April, then again in May. And now for the last 2 to 3 weeks, we've been holding below the 200-day, and I really feel that the longer we hold below the 200-day, the more likely it is we see like another leg lower. So to me, the 200-day is the line in the sand right here. If we're below it, I'm more like bearish minded, or more net bearish. Once we reclaim it, then you can start to possibly get more aggressive on the bull side, right? You're looking for a more substantial rebound than what we saw in the middle of October after our first drop through it. But what I wanted to highlight that in the context of the elections and the SPY options. So let me flip to the straddle right now. So what we can see is that right now these are midweek expirations. So these are options. These are spider options that expire at 4:15 p.m. tomorrow. So after the close. So they basically have give or take maybe a couple hours left of today's session, and then just tomorrow. So for all intents and purposes, these options are basically a bet on tomorrow. And what you can see is the current straddle right here. If you look at the 274.50, it's pricing in just under $4. Just and that's again that's basically just for Wednesday, because while I'm recording this, it's in the afternoon, but for the most part, you're probably not going to see that big of a move off any early results before the close. So this is basically the expected move for Wednesday, right? That's say 380 ish. what you can see is that it just shows like how much of the week's implied volatility is in tomorrow. Because when you look at the Friday expiration, right, 274.50, it's $5. So you're basically paying $3.80 for Wednesday, and then only another $1.20 for 2 days following that. So what I mean is that if Friday expiration is only $5, then that's like 2 days for only an extra $1.20. So you can see that expectations are for a pretty big day tomorrow. I mean, one way or the other. Like I'm not necessarily saying it's going to be up or down, but the expectation, so the straddle, the price didn't move for the SPY is saying about 380. So there's gonna, I mean, if the option market is anywhere near in line, or if they're, the move is anywhere near in line with it, I mean, you're looking at well over a 1% move for the SPY. So if we go back to the chart here, that's significant in the sense that if positive, that would put us back above the 200 days. So it's with such a large magnitude move expected, it is going to influence me personally a lot of the bullish, bearish, near-term sentiment. Because if we can get back above the 200-day, and I'm sure it's a lot of traders, because like 200-day is a very, very closely watched indicator. If we get back above the 200-day, it would not surprise me to see things really start to rebound and people, buy back into these beaten up stocks much more aggressively. On the opposite side, 380 would probably put us back down to 270. What that would also mean too, though, is that it's just more time underneath this 200-day, another bounce attempt that's failed, and there's actually a pretty sizable gap underneath 270. So it could open us up for a break below 270 and possibly a move into the 260s or even the low 260 to retest that low. If the results are unexpected and they take people by surprise and it's more risk off, another failed bounce to reclaim 200, it could really snowball quickly. So that's why like these tomorrow's action and the results are so critical, because they're pricing in a huge move, and in the context of what the setup is, it means quite a bit in terms of bullish and bearish the sentiment, because like the line in the sand is pretty close in hand, pretty close above. So I wanted to spend this video just highlighting that, just giving you guys an idea of the type of volatility expected tomorrow. Again, just something that we talked about in last night's session, and I thought it was like really interesting, and just shows, like these midweek spider options are interesting. Most of the time, you don't see such a disparity as you do right now, where such a high amount of premium is built into the first couple of days of the week. But in this case, you're seeing such a monster move priced in by tomorrow, and then following that, just a much smaller. For some of the people that are more aggressive, a calendar, just like a really short-term calendar spread, could be an interesting way. I mean, maybe if you're of the opinion that it's not going to be that big of a move, selling the midweek straddle, buying the weekly straddle. It's almost like a calendar play where you're saying that, okay, I don't think we're going to have a big move tomorrow. I think the options are wrong. But then, you kind of collect the premium, and for only an extra 2 days, you're paying $1.20. So it's kind of an interesting bet there. So, as always, love to hear from you guys. Questions, comments, pass them along. Even though earnings season may not have like those really high profile tech names, there are still a ton of volatile, smaller mid cap names still set to report. So a lot going on, even through next week, because next week is when we kind of get into retail earnings. So it's still lots to look forward to. So I hope you guys have a fantastic night. Go out and vote. And buckle up, because tomorrow seems like it could be a wild one.